Evening traders, it's Tuesday here, London Open. Surprisingly quiet start to the week. One trade I did do, I bought dollar yen on the pullback yesterday around 110.10. Stopped out this morning at 110.70. Look, I'm surprised that the pullback was so deep. That's a lot deeper than a general pullback. If we're going higher, then that is bigger than you'd expect. Now, the main reason I was looking for that high, that rally, is that the high made a fresh high, and I was like, all right, maybe we're going back above 112. And so I was looking to buy that dip. Now, in general, I take that sort of trade all day, every day, right? That's, to me, the bottom was in place, and it was, unlikely to go back down there on little to no news. This is just a trade that didn't work, yeah? I mean, it's, probability game. You keep running 70%ers, 60%ers, you'll do okay in the end. This one isn't. I'm not in any rush to re-engage it because I'm not feeling that move. I don't understand that deep pullback. I don't know where we're going now. Like, I'm surprised we got all the way down today towards that 50 level, as if there was something big happening in the markets when stocks weren't moving, and there was no sort of reaction I could see elsewhere to, say, Korean news or Syria news or anything which is tangible. Their yields weakening, so it was a bit probably just flow driven, and just I have to have a stop somewhere. So 110.70 is fine with me, and I took it, and I'm just, even if it starts to look strong again, I'm not going to do too quick to come back in. I mean, I've been on a good run. I can't win all the time, so it's these are the closed positions in the last couple of weeks, so solid effort. That trade just didn't work out. So it's that's just the way. So the only position I've got running at the moment is the short Aussie. Now Aussie dollar is stabilized. I thought it might do something like this yesterday. I think we closed out yesterday the short Aussie around about 85 or something. And I just don't like it when it doesn't move quick on the downside. Generally what the Aussie does is it collapses, and it broke a big level and it didn't push through. I was like, well, what's going on now? Where are we going here, Aussie? Are you going to bounce back, make life miserable for the sellers, and get back towards 75.50 and start tempting short squeezes to the top side, or are we going to actually make a more substantial move? And has your character changed? Are you going to be slow grind lower rather than a fast burn? And we have to sort of adapt if that's going to be the case, because that's not normal. We did see some strong CPI number from the UK again, so that's put the old Bank of England will raise rates at some point this year back on the cards. Now, you've seen Carney sort of downplay that, so I don't think that you're going to see too much follow through on the back of that number, but it doesn't hurt. It doesn't hurt the pound at all, and it's something to keep in the back of your mind if it starts to grind higher. This is, it doesn't need too much of a reason to short squeeze the pound. If you can get that short squeeze beginning, perhaps that will be enough. Just the possibility, and if it continues to remain stubbornly high, then yeah, perhaps we will see that become a bit more of a theme later in the year. With the lack of news out there, then small things can become bigger things. And so yeah, without really any sort of direction in the stock market, without direction in some of the big majors, it is hard to get excited right now. It's a range trading market, so 105 to 108 in the euro, 110 to sort of 112 in the dollar yen, and Aussie dollar maybe is going to hold 75, which means 77 is the top side. And that's so far away, I don't understand how it could get there. But if it starts to look like it's rallying, then we've got to give it a possibility. Climb the wall of Rory, if it's is the way to put it. Definitely don't go engaging heavy shorts here as if the Aussie's done for. It's showing some resilience again, and it's had that in the past. And remember, those Chinese US talks did okay. Yeah, it was a lot better than you will see. So today we're going to focus on the French elections. We haven't really gone into much depth about them. We're going to go through a report on the French elections that's coming up in 2 weeks' time. And we'll focus on We'll do a check on the technicals. We haven't seen them for a while either. Just to sort of back up what we're saying here about the key levels on the majors. Usually we use the Credit Suisse one. Do I have that today? No. It's okay. We can use a little replacement. Yeah, it's a dull market at the moment, guys. I'm sorry to say. US dollar's found a bit of support here, and you know it's starting to push back a little. And to break the downside of the euro is going to require more than we have going, and the pound, unfortunately, is not giving us any sort of love either. Like, I mean, short squeeze or collapse, do something, right? Don't just stay at 124 orbiting. Like, it collapses, you've got an opportunity to buy it at nice levels. If it short squeezes, you've got an opportunity to sell it at nice levels. Here, we're watching paint dry. I mean, this is today's range in the Aussie is 15 points so far. So, yeah, what can we do there? Forcing a trade in these environments is common. I'm going to try not to. I'm looking at sneaky little trades. Like, if you've been watching me in the last month, you know that I like to buy the euro. But we'll look at the euro a little bit more in reaction to, like, I'm pretty sure that the French elections are going to go past and Le Pen's not going to win. I'm pretty sure of that. But, you know, perhaps just a chance of her winning is going to create the 105 test. We might get that 105. 105, I'm happy to buy. Yeah, Aussie CAD continues to fall. That's correct. Alright, so France, 2 weeks to go. Polls are stabilised, voters' intentions are firm, Macron's the front runner. Le Pen could still score high in the first round. Focus is particularly going to turn to the June election. So this is the presidential elections, right? Market nervousness about a possible Le Pen victory is receded. Views less likely now. Euro is relatively low though. That's mostly ECB's doing. Alright, so first round you get down to 2 people. If there was a second round though, it looks like Le Pen would lose dramatically to Macron, well outside the standard deviation. This ain't Brexit, this ain't, you know, Trump winning. This is huge lead for Macron. Alright, so what seems to matter in France is unemployment, purchasing power, social security, and terrorism. So that's not immigration, right? Immigration is number 6. That's very different to Britain and to the US, which causes that populist move. You know, Le Pen's running on a platform of make France French again, right? That's her platform. So the big risk and the way that Le Pen can win is if voter turnout is poor. If Le Pen scores above 30% in the first round, the one that's coming up in the next in 2 weeks, then that could spook the market, according to these guys. And these two are not from the mainstream parties, which will make it a very interesting sort of situation where France is cohabitation. President is different from the party in the parliament. I won't go too deep into the French political system, but so you can see from that basically from the first round we're going to know what her chances are, and unless things change dramatically, she's got no chance of winning the second round, and she has a chance of not even winning, getting the first two in the first round. So very clear on these charts that the market's not moving too much. We got the euro support at 104.94. I'm happy to buy down there. Dollar yen 110's been tested 5 times. Looks like a 6th time is coming. Perhaps it's a lucky number 6. Pound is very stable with pretty solid support on dips as well. So don't expect it to go too far. If it breaks its top side, that's where you open up that 130. The debate begins in a couple of weeks. Post French elections, you start to see negotiations with the EU. I'm still happy to sell euro-pound rallies if we get nice levels. At the moment, it's a little low. So above 86, I'm still happy to be looking. But let's just see if there's any big levels that are close. See, dollar against 200 day is still far, far away. So we can't get too excited. Aussie dollars 200 is moving higher. I don't mind fading Aussie into that. I suspect that's going to be, a decent enough place to sell if we do get squeezes. I doubt we can get back above 76 very easily in the current market with commodity prices as commodity prices start to rally again. So I'm not talking oil here, I'm talking iron ore, our big export. The big news tomorrow is dollar CAD. Bank of Canada tomorrow. Oil continues to be strong, so we can't really run much past that. One place there is big moves is going on is dollar ZAR. So it's been a few downgrades going on in ZAR. Now we talked about this trade and how it was sort of scary. It was moving so quick. Whereas everything else is so small. This is up like 12% in a week, 2 weeks. So it's threatening to continue higher. But I couldn't buy here. I definitely couldn't buy here. It's just crazy if I start buying now. So it's a country, it's a pair that I don't trade much. I don't really want to jump in. But definitely it's getting a lot of attention and can easily go higher. When the last time it went berserk, it shot so ridiculously high that if you're on the wrong side of that, you got margin call for sure. It does have a very high interest rate, so the cost to carry is quite strong. So if you are long dollar ZAR, you will be paying a fair bit each day for that privilege. Yeah. So shorts, it's a bit of a carry trade on the short side. So perhaps if things stabilize there, it could be worth a look at the shorting. This is quite, downgrades and parliamentary uncertainty don't go away overnight though. German Zoi came out. Decent. Picking up in sentiment. Euro didn't really react to it though, so doesn't react to that data anymore. ING here. High UK CPI, only false hope for BOE tightening. Now we talked about this in the past, so it's not the right sort of inflation. Remember our friend FX888, he's talking to us about that last time it came out so strong and we were getting so excited. Cost price inflation is not the right sort of inflation. You want wage inflation, sort of that push inflation, but it's because this is mostly to do with the pound falling so much. Alright. Ha! Warning, the word boring is used 4 times in today's piece. Jesus Christ. Yeah, the markets were pretty crazy tight. Yellen did speak. She didn't make any headlines though. She's speaking early this morning, my time. They want to be ahead of the curve, not be behind it, blah blah blah. Suggests inflation is still below 2% in her estimation. I mean, look, you start to see inflation come through, then they're going to be forced to raise rates. At the moment, they haven't got that though. But we should keep an eye on these US inflations. When's US inflation? When's it coming out next? Jesus, Friday. Okay. Ask and you shall receive. Friday we've got some CPI numbers in the US. Thank you, Snyder. Yeah, it's hard for us to know outside how it is, because it's pretty crazy sort of, political situation anyway in that country, right? I mean, it's seems to be almost, mob rule in terms of the ANC, but yeah, that's, I don't know too much about it. But if you live there and it's not coming anytime soon, I mean, imagine if there's snap elections or yada yada, or Zuma, being stubborn and purging more and then leading to resigning and then new elections or whatever. I mean, that's how that sort of stuff unravels, right? Then you could see easily $ZAR go 13, 14, 14, 15 even, right? I mean, that's not crazy moves in emerging markets. But yeah, I mean, it's a currency for the brave. Trade it much smaller than you trade your normal currency, that's for sure. And it's a smash and grab sort of thing, right? You want to get in, make your money, get out because of that high carry cost, which is like 10% a year or something. Yeah, so today, look, in terms of trades, I'm looking at Euro Yen. I'm looking at Euro Dollar. Euro Yen's a little oversold. I'm not looking for big moves here. I'm probably a little early on the Euro Yen actually. If we get down to that 116, sort of 50-ish level, I'll be sniffing around. Depends if dollar yen's above 110 or not. But 110, 20 and say the euro dollar 105 will get us down there. So yeah, I'd rather the euro be testing 105 and dollar yen be at 111, and us being at that 116.50, then it being from dollar yen breaking 110. If dollar yen breaks 110, you can't buy any yen cross. Keep that in the back of your mind. But yeah, so euro yen's okay here, not the best. Euro dollar itself, you might be good for 50 points here until we get back up to that selling sort of region. Yeah, no, I can see that. That's you know, I move back towards 160.40. Coming days makes sense here. Definitely seems it's got a little bit of room. So look, I'll go in on that. It's a sort of trade where you can get. I'll just put my stop at 105.60. If you really want to get adventurous, you can put your stop at 104.80. But probably no need. Just reevaluate when the market's down there. If it gets down there, if we get higher, we're going. Jeez, this is risk reward's not really there on this. Look, I'm going to put my stop here, but easily I could be closing out if we break 105.80. Okay, so I like the buy, but I'll probably be out if it gets to 105.80, just closing manually. And tomorrow we'll go over if I do close it and when I closed it and why I closed it. US data wise, nothing there to get the market moving too much. Kashkari speaks. He dissented from the rate hike, so that's something. Perhaps he will be a bit more dovish as well. So he didn't vote for the rate hike. Yeah, gold against ZAR though. Is that what you're looking to trade, or gold against US? Because gold against the US is not the easiest sort of trade at the moment. It is similar to, say, dollar yen. Shenanigans are going on. You know, dollar yen should have broken 110. Gold should have held above 1270. That sharp reversal. Lucky I got out of my, you know, took profits here. But that sharp reversal definitely got me spooked about buying here on dips. See where it wants to go. Dollar yen's going higher than gold's going low. And things are a little bit funny in gold, so yeah. I'm sticking to something a little bit easier, like the euro. Euro Aussie makes sense too, but you know, Aussie's not behaving in the proper sort of sell-off speed that you like. So Euro Aussie's probably going sideways as well. That's hard to get excited about. But yeah, remember we were buying Euro Aussie on anticipation of the Aussie breaking 75. If you see Aussie break 75 again, in at 74.70 or something, then yeah, hop onto the crosses. Pound Aussie, Euro Aussie. Still got a lot of room to the top side if we can reverse. Resistance on the pound, the Euro Aussie's all the way up at 145, 144. Alright guys, let me put that up in the room, my Euro trade. Yeah, I think you'd be forcing a trade on gold. With all that negativity, it's hard to be excited by lacking follow through, right? It's like the dollar yen. If it doesn't break 10, if it didn't break 110 last week, well, why this week? There's no new news. There's no major thing to break it. I mean, you got the CPI on Friday, but that's medium tier at best. It's important if it's strong, or discounted if it's not. If it stays the same, I mean. Right, we're buying USD on strong local data from Germany and decent price action, but also good levels. tight stop with real support still down at 105. We'll do halves. We don't get committed. Yeah, there's little reason to be playing Aussie Swiss when you can be playing Aussie dollar, and Euro Aussie is very similar to Aussie. So Euro Aussie buying is very similar to Aussie Swiss selling. There's no reason to be involved in Aussie Swiss at all. Actually, Euro Aussie is much cleaner, unless you're a full-time Euro Swiss trader and you can add a little bit of savviness into your decision making. I would leave all the Swiss crosses alone. It's the Swiss is still the Euro inverted. So dollar Swiss and Euro dollar very much 0.9 correlation sort of movement. Alright guys, good luck with your trades. I'll be back tomorrow at 9 GMT. No reason to go crazy at the moment. There isn't much happening. We might get a little bit more movement on Thursday. We got the Australian jobs. That could be enough to break us down to the downside. Also on Friday we got the US CPI, which could be the main things. Just also watch out for any headlines that we see coming from Russia-US relations, and that would be the main sort of threat. Otherwise, don't expect too much in the way of market movements this next 24 to 48 hours.